expenditure cycle is a recurring set of business activities and related information processing operations associated with purchase and payment. So if we look at this context diagram for the expenditure cycle, the primary exchange of information happens right here. It's between the basically it's with its supplies, with the company supplies. Okay. So we send purchase orders to the supplies and later payments, and what suppliers send to this process is invoices and goods and services. Within the organization, information is exchanged between this process, between this cycle, and other sources like revenue cycles, right? Because we mentioned last time, revenue cycles, if they find inventory is not available, they're going to send back orders to the purchase. Okay. So received goods will send to revenue cycles. And also, there are information exchanged with information controls and various departments who initiated the purchase needs. And of course, production cycles. Okay. And all the accounting information will be sent to the general ledger and reporting systems. The primary objective in the expenditure cycle is to minimize the total cost of acquiring and maintaining inventories, supplies, and various services. So to accomplish this objective, we have a lot of decisions to make. For example, inventory levels. What is the optimal inventory levels? Which supply we should choose, right? So what kind of IT, information technology, we should use to improve the efficiency, right? So we're gonna go through many of those questions in this lecture. All right. So we can decompose the expenditure cycle into 4 basic activities. Right, so this can be shown in the level 0 DFD. Right, 1, 2, 3, 4. We have 4 activities. First, we have ordering. We can order materials, supplies, and services. Then we have the receiving, which we receive materials, supplies, and services. Okay. Then we move to the approve supplies or vendors' invoices, and finally, the cash payment. So we're going to talk about these details when we cover the specific activities. General threats and controls. There are some general threats, and if you look at these threats, look very familiar, right? They're exactly the same threats to the revenue cycles. Inaccurate or invalid master data, right? Unauthorized disclosure of sensitive information, loss of data, and poor performance. And we have the same controls we can apply to mitigate these threats, right? So let's talk about the first activity, order goods or service. So So we have this level 1 now. Level 1 DFT showing there are basically two processes for this step. We have the first, we're going to determine what to order. The second is select which supply we should order from. So let's briefly explain these processes. So as this figure shows, for this company, and actually for most companies, the inventory and controls, right, is mainly responsible for initiating the purchase requisitions, right, which makes sure that we have adequate quantity of materials and supplies. Any department, in fact, any other department can also submit a request. Right? Various departments can also submit request for purchase. And also, this request can be sent from the expenditure cycle itself. Okay, we're going to talk about that because when the warehouse, the receiving department find there's some parts are missing, we can also send this request. And also, this request can be sent from the revenue cycle, right? We talk about that the back order will also be sent to the to this process. So we're going to exchange data information with inventory master database, okay, to verify the request. Okay, once it's determined what to order, we send the purchase request to the next process, determine or select supplies. Right, in this process, get information with inventory database, right? Also supply database, which is most important one for this step. So once it's determined, we're gonna generate purchase order, send purchase order to supplies, and update that in the purchase order database. Copy of purchase order will also be sent to receiving department, will be sent to the department who initiated the purchase request, right? So various copies will be sent. And also account payable will also be notified with this pending financial commitment. All right, so let's talk about some of the details. So the source document, right, is purchase requisition. So this is a request to purchase goods, right? It's either can be triggered by inventory control function or any department or any employees. So the purchase requisition is going to identify, right? It's going to identify the item we need, right? The location, delivery location, and the date needed, numbers, description, right? And the price of each item requested, and also may suggest supplies. But it's not going to determine the supplies, just may suggest a supply. So what to order, when to order, and how much to purchase. To answer these questions, we need to use inventory management systems. Okay? So the traditional approach is to maintain sufficient stock so that production can continue without interruption. Well, we're going to talk about some of these traditional approach and the new development. Traditionally, we're going to use this called economic order quantity approach, right? In this approach, we're going to find an optimal order size. The optimal order size is calculated by minimizing the sum of ordering costs, carrying costs, and the stock out costs. Right? If I carry too little inventories, the carrying cost will be lower, but the stock out cost could be super high. Once the production is interrupted, the stock out cost will be super high. Or I can carry a lot inventory. The stock out cost will be minimized, but the carrying cost will be super high. And also depends on the frequency of ordering. Ordering cost will be high or lower, depends. So we're gonna minimize the sum of all these costs in this approach. So a reorder point will be calculated. It's going to specify the level to which inventory balance of an item must fall before an order to replenish the stock is initiated. So it's a threshold. Below that, we're going to reorder. Okay, that's a reorder point. All right, so most companies is going to calculate their optimal inventory size. But how about social responsibility? Okay, so there's a trade-off between cost and social responsibility. Okay, we have seen a lot of this debatable topic, in COVID-19. So should company carry more inventory to satisfy people's needs? Or should they, just to put their economic benefit as a priority when they do business? Okay, you can watch this video to see what are the issues people face in COVID-19, especially for supply chain management. We have some new approach of the materials requirements planning, MRP approach. So this approach seeks to reduce inventory levels by improving the accuracy of forecasting techniques to better schedule purchases to satisfy production needs. In other words, what to order, how much to order, when to order depends on our sales forecast. Right? So by doing that, if we can accurately forecast sales, we can range, right, manufacturing, or if we are retailers, we can range how the amount, the time of inventory purchase. It's MRP. And also we have the just-in-time approach, right? And this approach attempts to minimize, if not totally eliminate, carrying inventory by purchasing and producing goods in response to actual sales. Right? In this approach, the purchase or the manufacturing depends on the customer's orders, demand. But also this approach requires frequent deliveries. So everything has to be maintained in a timely manner. So you can watch these videos to see how Toyota started JIT and what happened then, the consequence of JIT. So there are some major differences between MRP and JIT. So it's a production scheduling will be different. Why? MRP schedules production to meet forecast sales, but JIT schedules production in response to customer demands. Right? a lot of computers. If you order computers from Dell, right? Usually you're gonna send your orders online, and they're gonna start manufacturing, but it's gonna be really quick. You won't notice a delay. If they have the parts available, usually it can be completed within 1 to 2 days. So this is a typical JIT approach. So they're used for different products. MRP is often used for consumer staples, while JIT is often used for products with short life cycles. Right? For example, the seasonal toys, right? Or seasonal decoration stuff for Christmas, holiday stuff. Those will be usually JIT works better, because if you don't have the demand and you produce a lot of those products, and if you couldn't sell, you're going to suffer a huge loss. Okay. The next step is to choose a supply. Okay. So how to choose a supply? The criteria we're going to use is price, quality, and dependability. Right? In simple words, that we're going to pick the best quality supplies with lowest price. Not easy. So once we determine the main supplies, we can also maintain a list of alternative supplies in case, right, we need them. So once we determine the supplies and item, right, we're going to send purchase order. Purchase order is a document or electronic form that formally requests a supplier to sell and deliver specified products at specified price. The PO is both a contract and a promise to pay. And later we're going to mention that with modern technology, we can eliminate invoices. Yeah, we're going to just pay based on purchase order, because eventually the invoices will be the same as purchase order. So I'm going to talk about that. This is one way to improve the efficiency in the expenditure cycle. And also, many companies maintain special purchasing agreement with their suppliers. So those parties is going to have a blank purchase order or a blanket order, right? This is a commitment to purchase specified items at a designated price for a set time period. Okay, usually it's a long-term period. Right? For example, I can sign a 2-year contract with my supplier requesting 2 million products, right? For the next 2 years, and I will inform and also the delivery time will be specified, right? Quarterly delivery amount. So I don't have to place orders every quarter. Now, using the EDI, the electronic data interchange, can significantly reduce costs. So we talked about that in the previous lecture. But this also means that the supply also need to implement EDI system. Right? For example, if you are supplies to Walmart, okay, and you have to have the EDI in order to do business with Walmart. In the past, EDI was expensive, right? But now it's very affordable. The vendor management inventory program also reduces the cost. VMI, also known as VMI, the Vendor Managed Inventory System. So this essentially outsources much of the inventory control and purchasing functions. So now the supply are given access to sales and inventory data, and are authorized to automatically replenish inventory when stocks falls. Okay, you can watch these videos to learn more about VMI. Okay, and other techniques that's going to help us reduce cost or improve the quality. We have reverse auctions. So in this case, we're going to let the suppliers to bid. Okay, usually we're going to pick the supplier who's giving the lowest price, reverse auctions, but also we're going to pay attention to their quality and dependability. And to reduce errors and improve the quality, we can also do the pre-award audits, in which we're going to send out our internal audit to visit each supplies. So we're going to verify the accuracy of its bid before we award the contract. Oh, let's talk about threats and the related controls for this activity. So first threat, we have the stock out and excess inventory. We have too little or too many inventory. What are the related controls? Right? The perpetual inventory system, of course, is a good control because we have a real-time monitoring on the level of inventories. Right? Of course, the barcoding and the radio frequency identification, RFID, can also help monitoring inventory levels. But the physical count is always important. So we don't have to regularly physical count all the inventories. So it depends on the importance of the inventories. Right? Important inventories will be counted more frequently, but less important inventory will be counted, right? Like once a year, that should be enough, right? Next threat is purchasing items not needed. So supervisors need to review and approve all the purchase requisitions. Okay. And also, this purchasing should be centralized. For example, the different department or units may submit the same request for the same items at a different time. So as a result, the organization may centralize this function so it can carry a larger inventory that satisfied all the needs of different departments and with a low price. The next threat is purchasing items at a high price, inflated price. So how to reduce price? Controls include to maintain a price list for all the frequently used items. Okay. And to have competitive bids. And all the purchase order need to be reviewed. Right? To make sure the previous mentioned policies has been followed. Okay. And of course, we're gonna also have a budget, right? The budget is gonna also help us to mitigate inflated price for purchase orders, because someone is going to be responsible for the budget, right? If you are over budgeted, then you're going to take responsibility. The next threat is purchasing goods of poor quality. So controls include we're going to use only approved supplies. Again, all purchase order will be reviewed, and the data, supply data, will be collected and analyzed, right, to make sure their performance can satisfy our needs. The next threat is unreliable suppliers, right? To mitigate this risk, we're going to monitor supply performance, and we're going to require quality certifications, right? For example, the suppliers need to be certified as meeting international quality standards, such as ISO 9000 and other standards. And in most recent years, suppliers also need to be certified for a lot of other ethical standards. All right, let's talk about the last threat on this page, which is kickbacks. Okay, kickbacks are gifts from suppliers to purchasing agent. Basically, they're going to influence the agent's choices of supplies. This could be the biggest threat, right? Because usually we're going to see inflating price, and sometimes with low quality stuff. Okay. So companies should prohibit gifts. Should have this policy. So all their employees will be trained, especially for these purchasing agents will be trained. Going to maintain a very strict policy. Okay, and also we're going to have the job rotations for those purchasing agent. And finally, we're going to have supply audit. So for manufacturer supply audit is essential tools. Okay, it's going to provide a manufacturer with insight into the supplier's product and the supplier's process to make sure the product and process are adhering to the manufacturer's quality standards. Okay, so in the audit, it's very easy to check their records to see if they are having kickbacks to our agents. Okay, we have some multiple choice questions. You can have a try. Okay, so we move to the next activity, the receiving process. So in these activities, the receiving department is going to accept deliveries from suppliers. The receiving department usually reports to the warehouse manager, and warehouse manager reports to the vice president. Inventory is going to also have the store department. Also report to the warehouse manager. So there are two subunits in warehouse, right? Receiving and storage. So in this step, we're going to verify, right, what and how much and the quality of the delivery against the purchase order. And two source documents will be discussed: receiving report and a debit memo. Okay, so first of all, let's go through the all these activities in this level 1 DFD for receiving process. So most suppliers will send electronic notification of coming deliveries. So this gives the companies, right, time to be prepared. But you need to have a staff. All right. So when the delivery arrives, the receiving clock is going to basically compare the purchase order with the supplier's packing slip, and also with open purchase order file. Right? Gonna check information from the purchase order file to see whether those goods are what we have ordered. Then the receiving department, receiving clerk, is going to verify the quantity, right, and inspect the quality of those goods. So receiving clerk is going to document everything on a receiving report. So the receiving report is going to record all the information about the delivery, right? Item, date received, shipper, supplies, and the quantity, and the condition. If everything's fine, the receiving department is going to update inventory database, right? And send the goods and receiving report to the warehouse or the department. But if there are some item missing, right, damaged goods or inferior quality goods, then the receiving department is going to contact the suppliers, right? Arrange returns, exchange, or most likely a debit memo. So a debit memo is going to record the adjustment being requested. For example, right? More discount if the quality is below optimal level, or right, to compensate for the missing quantity. And the debit memo will be sent to the account payable, accounting department, right, to notify them, and so they can make adjustment to account payable balances to the supply. And also, if we need to return some of those products to the suppliers, right, the credit memo should also be accompanied. So eventually the goods and receiving report will be forwarded to inventory control, and it can update inventory database, and also to update the account payables. Right? So all these are the activities in this process. So you can watch this video to see how Amazon receives your inventory, what kind of process they have. Threats and controls. One of the threats in receiving goods is accepting unordered item. So it could be a mistake from our side or from the supply side. So what are the controls? Okay. So we're going to authorize purchase orders, and the receiving department is going to check whether we have authorized purchase order before we receive those goods. If we don't have any authorized purchase order, we're going to refuse receipt. Okay, send those back. to the supply. Mistakes in counting. So if the receiving department clerk, right, mistakenly counted the amount received, then we may have a problems for our inventory system. So what are the controls? Right? So the person is going to take responsibility. All the arrival goods will be counted and then signed by receiving clerk. Okay? Right, this is important because sometimes the counting could be correct, but the receiving clerk may fail to record the variations of those products received. Maybe there is a exact same product but with different colors. Okay? So if you recorded the quantity correctly but not color, then we also is going to mess up with our inventory system. Okay, so the receiving clerk is going to take responsibility. And also the technology like barcodes and IFRD for sure is going to help, especially for the IFRD. It automated the receiving process. And verifying receipt of services pose additional threat because services are not easy to verify. For example, you hire a painter to paint your home, and it's very difficult to see to verify whether a good prime has been painted before they put the paint onto your wall. Okay, so we must have the person who's going to take responsibility. Those are the person who receive their service. The department who received the service is going to take responsibility. A good budget controls is going to mitigate risk, right? Because eventually, if you have a receive poor quality service, you're going to request the service again, and it's going to you can over budget, right? And also audits. Good audits is going to mitigate the risk. So let's talk about biggest threats: inventory theft. Right, to prevent employees stealing inventories, we're going to restrict physical access to inventory. Only authorized persons can get an access to inventory. We need to document all inventory transfer, even inventory transfer between departments. Right, it will be documented. For example, inventory when they transferred from the receiving department to the warehouse, documented. Right, from the warehouse to other department will be documented. And it's important to maintain a good segregation among the following three functions: physical custody, right, the receiving of inventories, and the adjusting inventory record. These three functions should be well segregated. Next is approve supplies invoices and cash disbursement. So the third activity is approving supply invoices. So in these activities, we're going to match the supply invoices to purchase order and receiving report. Okay. So the supply invoices, purchase order, and receiving report. This combination is called voucher package. Voucher package. right? If we can match these documents, right? If the voucher package is valid, we should prove and for payment, and we can do that in two systems. One is called a non-voucher system. The other is voucher system. Okay, in a non-voucher system, each voucher package is stored in the open invoice file, and then once it is paid, okay, the voucher package will be moved to the paid invoice file. So this is invoice by invoice handling process. It's good for a small business. Not then infrequent payment should be fine. But if you have a large quantity or a very frequent purchase and payment to vendors, and probably the voucher system is better. In a voucher system, we're gonna generate an additional document called a disbursement voucher. Okay. The disbursement voucher is going to list multiple outstanding invoices for a particular supply. So it's just like a summarized voucher. So it's going to improve the efficiency for sure. That's called a voucher system. So how to improve the efficiency for these activities? The EDI for sure is a good tool. And also, we're going to have this evaluated received settlement, ERS approach. The ERS approach is also known as invoiceless approach. Traditionally, we should have the three-way matching, right? The invoices, purchase order, and receipt, and the receiving report. Three-way matching to approve the payment to vendors. But under the ERS, we have the two-way matching because the vendor's invoice can be skipped. We're going to match the purchase order and receiving report. Because if we trust our systems, we can automate the payment process by matching the purchase order and receiving report, because in reliable systems, our purchase order will always be the same as their vendors' invoices. Okay, so the whole process is automated unless we need to intervene the process if some abnormal, stuff has been discovered by the system. And for small purchases or miscellaneous purchases, a procurement card could be very useful. A procurement card is a corporate credit card that employee can use, okay, at designated suppliers. So if we use a credit card, the amount recorded in the credit card will be automatically become the account payable to that suppliers, and it will be automatically mapped to the specific general ledger accounts, such as office supplies. So therefore, procurement card improve the efficiency. All right, let's talk about threats and controls. Errors in supply invoices. So how to mitigate this risk? Right, we're going to verify invoice accuracy, that's for sure. And we're going to keep receipt for procurement card purchases, right? If we use corporate credit card, or the receipt should be kept. by adopting ERS, we're going to minimize the errors in supply invoices. Because these supply invoices are typically skipped under ERS approach. Next threat is mistakes in posting to account payables. So data entry edit controls are always good controls to minimize the posting errors, and also reconciliation also works to mitigate this risk. Right, we have multiple choice questions. The final step is cash disbursement, in which the cashier is going to pay suppliers. And in this step, it's very important to have the good segregation of the custody, which is cashier position, from the other two roles, the authorization and the recording functions. So cashier cannot be part of the cannot be associated with purchasing function, purchasing department, and the cashier cannot be associated with account payable functions. So this is a segregation. Right, think about it. If the cashier is also can authorize purchase, then the person is going to authorize a fake sales. Okay, a purchase from a fake person, and send the money to his or her own bank account. Okay, or if the cashier can record account payables, then again the cashier can create a fake transactions and record the payables to himself or herself, then send money, right? So segregation can prevent those misconduct. All right, threats and controls in this step. Failure to take discounts. So their invoices will be recorded, right? Carefully analyzed, and make sure that the due date will not be missed, and the discount will be taken if it's possible. And also cash flow budget is also a good tool. Pay for items not received, right? The matching is important. Matching is important. So the voucher package, right, should be valid before we make payment. Duplicate payments. We only pay with original invoices. Okay, once original invoices are used, it will be marked and filed. We're gonna cancel supporting documents when payment is made. Now we talk about theft of cash, right? In addition to the segregation, we should also have the physical security of checks. Okay, checks should have limited access, and checks should be sequentially numbered and periodically accounted for to see if there's a missing checks, unused checks. And reconciliation bank accounts is also a good tool to detect theft of cash. And also we need to be careful about check alterations, right? Make sure that checks are protected well. And to make sure we have enough cash to pay suppliers, okay, we need to have a good cash flow budget. Right, we have multiple choice questions. Have a try. So we're going to close this lecture by a case study. For example, we have the following scenarios. A purchasing agent orders materials from a supplier that he partially owns. Okay? This may potentially have problems, right? So what are the controls the company may use to mitigate this risk? Right? The company is going to require a purchase requisition from the operating department as authorization for preparation of all purchase orders. Okay, so it's not from the purchase requisition is not from the purchasing agent, but from the authorized department. We're going to also require purchasing managers, right, to review the purchase requisitions to make sure that orders are placed only with approved vendors before the manager approves the purchasing order. We also need to require purchasing agent to disclose any financial interest, any conflict of interest. Okay, we're going to ensure that purchasing agent do not have investment in vendors on the approved vendor list. Okay, these are important internal controls. Another scenarios: receiving dock personnel steal inventory and then claim that inventory was sent to the warehouse. Right? If that happens, then we're going to have shortages in inventory in our inventory, right? So what are the controls? We're going to count all deliveries and record accounts on the receiving report. Okay? So if the receiving dock personnel count, there are 100, okay, then the clerk is going to put 100 and sign a name. Then the next, we're going to require warehouse personnel to count the goods again when they're transferred to the warehouse, and acknowledge receipt of the specified quantity by signing the receiving report. So if the receiving dock personnel claimed he sent it 100 units, but in fact he only sent it 99 units, stole 1 unit, then the warehouse personnel will discover that. Okay? Right? Because the warehouse personnel is going to count again. If the warehouse personnel fail to count again and sign the receiving report, then the warehouse personnel is going to take responsibility together with the receiving personnel. We're going to have the accounts payable personnel to review the signed receiving report copy. Now the receiving report is signed by both the receiving department and the warehouse personnel before approving the payment. Alright, this is pretty much for Lecture 12.